What's up, macro enthusiasts? This is the Macro Ghost, and welcome to this week's deep dive into gold, silver, rare earth, and uranium. Why? Because these are precious and industrial metals that really took a beating off of the back of the new Fed Chair, Kevin Warsh. Warsh is a hawkish pick who's all about bolstering the US dollar and ditching the inflationary quantitative easing policy. This triggered a dollar surge that crushed gold prices over 10%, silver nosedived 30%, rare earth and uranium were also hit as a byproduct of this new Fed chair. But here's the real kicker. Do you remember tariffs? You remember what the market said? Everything's going down? It didn't. This is pure macroeconomic theater. Time and time again, these policy pivots scream buy the dip. It's worked over and over again throughout history, and I'm going to tell you why it's a buy the dip again. Stick around as we unpack why this pullback in gold, silver, uranium, and rare earth is a golden opportunity and entry point for your investment. I put up a poll on YouTube not so long ago. What would you like me to do a long form video on? And the overwhelming majority said precious metals. I'm not sure people understand what industrial commodities are, so I wanted to cover those too because the correlation between precious and industrial is very high right now. And the opportunity for the future is actually with industrial commodities, not necessarily metals, but commodities. What is a commodity? Rare earth is a commodity. Copper is a commodity. Nickel, steel, lithium are commodities. Uranium is a commodity, okay? And within the confines of this particular show, I wanted to cover gold, silver, uranium, and rare earth because as we saw a new Fed chair being announced, there was a swift and sudden reaction in the price of all metals, precious and industrial. So the first things first, I'm going to look at gold here, and we have a linear chart. And as we can see, gold has just been ripping since it broke out and retested in November 2023. It retested a couple times, February 2024. It moves very slow, but that's a clear breakout. And I started recommending it at around 22 to 2400 to friends and family. And I actually told them to sell 30% around 4800, a little bit early, but I'll never get the bottom and I'll never catch the top. But I wanted to talk about, are we at a top? Did gold top? My short answer is no, because gold is a safe haven asset. Gold has been mooning by and large because the global market is scared of fiat. The Japanese bonds, US debt, there's been a gold rush. And the trend is my friend. And so I just treat every pullback as a reevaluation point. In this reevaluation point, I'm on the daily here. As you can see, gold kind of hugs the daily Gaussian channel. It went in it actually. When it separates from it, it pulls right back. Separation to 5,500, pull right back. And that pullback was the Kevin Warsh news. Kevin Warsh is not a bad guy. He's going to protect the dollar. And if you're going to protect the dollar, that means, some of the gold bugs are going to take profits because gold has been very, very extended. It printed an 89 on the daily RSI. But more importantly, let's go over to the weekly and look at the weekly. This was its prior run up here. Let's go back 20 years, 25 years, 20 years. And look at the prior run up. When it gets away from the weekly Gaussian, it pulls back to it. And we can zoom into gold here and look at this. This is the financial collapse of derivatives. And it's a blip on the radar of gold. Gold did decline, but it's a blip. And it did not interfere with the gold bull run, which was November 2004 to the top here of September 2011, a 7-year bull run. It did not interfere. And then gold, what it did was it went to 1,800 and then consolidated around 1,000. So it lost about 40%, 35, 40% over the years. And it will create a nice bottom and create a new trajectory as fiat continues to fail us. And it fails us because the people governing fiat are failing us. So what I would look for gold, I don't think the run is over by any means. I put this chart, this is 2,500 days of a bull run, 7 years. I wouldn't necessarily reproduce this time horizon, but something like that, where we can see a range starting here, 255% would be 7,000. Let's go 8,000, but we'll carry it over a few years because gold is not going to act like a risk asset. So what I'm saying is it should pull back, but I wouldn't worry about the pullbacks. I don't think the bull run is over. I don't think it's going to decline 40%. I think it has to extend way higher, like 20,000, 30,000 to pull back 50%. Just because fiat is garbage. Now, Kevin Warsh is going to come in and protect the dollar, but the dollar is off the gold standard now for 45, 50 years. And eventually the dollar will go to zero, eventually. So because the dollar is priced against the gold is priced against the dollar, there really isn't a necessary top if fiat continues to go to zero. So this looks like a huge rejection candle. You see that right there on the weekly. But then it looks like a dragonfly here or a hammer on the weekly. And we can go back, we can go to here. That looked like a top, right? 3,500. And that looked like a top, 2,800, right? They all look like tops. That looked like a top, 4,300. A lot of people were calling the gold top there. But essentially my thesis is it's not a top. It could come down to 4,500 or 4,000 and consolidate. But I'd look for 4,400 right there to be support because that was the previous high. Silver is similar, but not the same. You see a very bearish rejection here. But again, pretty early in the move because silver you have consolidating since 2020, breaking out May 2025. That's a 5-year consolidation. So silver I would be actually a little bit more bullish on because it hasn't moved yet. And silver, as I've been talking about on this channel, is for industrial AI. It's a superconductor. In fact, silver is the one metal that is both a precious metal and an industrial metal. So any pullbacks here, like if we're lucky to get 70 again or even 55, those would be tremendous buys because I do see silver, going to 500 eventually. Is it 5 years? Is it 3 years? Is it 10 years? I don't know. I can't answer those questions for you. But I can say that demand does not equal supply. The supply of silver is in a deficit and the demand is very, very high from SanDisk, NVIDIA, data centers. They all need silver. So rationally, from a macroeconomic standpoint, you're going to want to buy silver pullbacks. And this RSI pullback is a great thing. If you know how to read the RSI, you can go on the daily here. When this gets close to 30, you want to buy silver. Okay? And I use different time frames, but again, it had a really nice, rejection, and those rejections in a bull market for silver are buys. So I'm going to be looking to buy. So I wouldn't be nervous about that. It's just going to reload. It's out of bullets, and it's going to reload as AI reloads, as new energy reloads. SanDisk, Palantir, they both had earnings that blasted street estimates. That tells you the AI run is clearly still in the beginning stages. And to touch on AI more, I'm going to go into REMX, rare earth, VanEck rare earth. It's an ETF for miners. And I like this chart even more than silver because rare earth, turn on your TV or watch YouTube and watch President Trump speak. I think every 3 or 4 times he speaks, he mentions rare earth. Greenland, Venezuela, rare earth. So this is a chart you want to buy because if you look at this chart, it's still consolidating. But this is the most important industrial commodity in AI, the most important. It's this and silver. Silver's a conductor, but AI, rare earth is made, it produces the AI. You can't produce AI without rare earth. So extremely important. And uranium as well. Uranium also contributes to AI, but contributes to EV, electronic vehicles as well. And if you listen to Elon, that's kind of the way the world is going to be going. Whether you like EV or not, electric vehicles, electric robotics, new energy, the world is going to be becoming more and more accustomed to new energy. And uranium, again, like silver, is in a huge deficit. So given what I see on these charts, I mean, we're in the very, very beginning stages. You can fast forward to 2028, 2029, given inflation dynamics and the dollar and the weakening dollar, the dollar is going to continue to weaken. It's just not going to go into hyperinflation like the previous Fed Chair Powell, Bernanke. They were hyperinflation guys. They were balance sheet guys, QE guys. That shit's no good. Stop thinking that it's good for your assets. It's not. It destroys value, keeping a big Fed balance sheet. And Warsh is against that. So he's for lower interest rates because that creates productivity and confidence and a GDP. He's not a conservative guy by any means. He just wants to protect the future value of the middle class because the quickest way to destroy the middle class is QE. Let me say that again. The quickest way for everybody listening to this to be absolutely wiped out by inflation is QE, and he is against that. That's why you saw gold, silver, uranium, rare earth all pull back, and all those pullbacks, just like the tariff lows, they are buys. We do not see a top in commodities for 5, 10, maybe 20 years. I've been saying on this channel since the beginning, commodities are going to outperform everything for the next 20 years, and I stand by that. So, if you like this show, if you like the content that I am bringing, like, subscribe, and comment. The algorithm loves those comments. And share this with your friends. You know, this is not financial advice. I'm not an advisor, but I'm somebody with strong opinions with years and even decades of market experience. So, I'm going to leave this here. Have a good day, have a good week, and I will see you in the next one.